There's a lot of talk around Australia at the moment about the Australian property market coming to a crash in 2022. Now, in today's video, we're going to talk through some of the positives and negatives associated with the Australian economy and the Australian housing market at the moment. Now, Benny, because the negative side of things seems to be the hot topic at the moment, why don't we start there and start talking through some of the things that make us feel as though the Australian economy might be in a little bit of a weird situation?
So the number one issue that we're both feeling at the moment, man, is the way that the average person's feeling in Australia. The media is super negative. The sentiment's shocking at the moment. The index is way down. People expect houses to decline in value. They expect the stock market to decline in value. Crypto's shat itself as well. So the feeling on average, which I think is 90% of gains or losses in a market, is not good right now.
Yeah, fair enough. You know, it can't just be consumer sentiment though. Like what other negative things are we seeing out there at the moment?
You know, at the moment as well, like interest rates are going up. It's the first time we've seen interest rates go up in the last 10 years. And that's scary because there's a whole generation of investors, of homeowners, of people that haven't bought yet that are seeing this for the first time. And like we talked about off camera, there's a very strong correlation over 50 years between rates coming down and prices going up. But, you know, when you look at what CoreLogic or CBA are saying about this, there's not a really strong correlation between rates actually going up and house prices coming down. It's not this direct linear thing. And off the back of that, I think between 2002 and 2008, rates went up something like 22 times in 6 or 7 years. But in 6 of Australia's capital cities, house prices went up by more than 100%. So it's interesting to see what's going to happen next there.
And then coupling those interest rate rises with the inflation that's occurring right now surely is a little bit of a negative thing as well.
Absolutely, bro. Like the cost of living's going up. I know petrol, I know groceries, I know a lot of services have gone up. And then on top of that, obviously rents are going up in many places with interest rates at the same time. And all of that is obviously what the government's trying to do at the moment, which is pull the handbrake, get people to stop spending, demand goes down, and then the economy can stabilise and we're not going to have this runaway inflation. But all of this ultimately comes back to the huge amount of money they chucked out globally in the last couple of years. A lot of that money went into, you know, originally savings and then discretionary spending, and then it obviously went into assets as well. And when assets go up by 100% in the American stock market in 7 years and 100% over 10 years in many property markets around the world, then there has to be a prick and there has to be like something that pulls it back for a little while as well, which is what's happening right now.
And one thing that we noticed from looking back at like 50 years worth of year on data is generally when you get a big boom, like a big 20+% growth year, the subsequent year is not anywhere near as strong because people are quite fatigued, and it was a fatiguing year 2021 when you look at crypto markets, stock markets, property markets around the world, all quite booming. So naturally you're going to have a slowdown this year.
You know, I think it's just an emotional time in the markets. The second half of real estate or stock market cycle is always bubblier, and, you know, there's mini busts throughout it and people just don't feel as well. But there's so many good things occurring at the moment, man. So what are some of those things that you're noticing in terms of the positives in the Australian economy at the moment that aren't getting reported on too much at the moment?
Yeah, look, I've got to pick up the piece of paper here and go through, because there is quite a lot of interesting things that are occurring around Australia at the moment that aren't getting communicated through different media outlets. And I think these really promote like a success story, which is really exciting. And, you know, the fact that we've got record low unemployment at the moment, you know, the job listings on Seek and things like that are really high. You know, a lot of people are finding that employment, underemployment is coming back up as well. So everybody's got jobs, and along with that is we're seeing some wage growth as well. So people are starting to earn a little bit more money.
I love that, bro. So what's also going on with savings at the moment and infrastructure around Oz?
Yeah, fascinating to think that like Australian savings are at really high levels at the moment. A lot of people have been parking that money with the record low interest rates over the previous years in offset accounts, redraw accounts, savings accounts, and they've built up those really big buffers there at the moment, which will obviously give them a nice safety net when these interest rates do come up and as the cost of living goes up at the moment as well. But the really exciting thing is the Aussie government, Labor's back in action and they're spending some money on infrastructure. There is amazing amount of projects all around Australia, lots of really cool things happening, a lot of highways being upgraded and widened, a lot of new universities, hospitals coming to the market, new train lines opening up. You're seeing lots of cool different things happen up here in southeast Queensland. Obviously, they've got huge infrastructure budgets and huge expectations leading up to the 2032 Olympic Games, which I'm really excited about. It'd be cool to have, my home city, well, not my home city, but my current home city hosting the Olympic Games. It's going to bring a lot of people to the market, a lot of eyeballs to the market, a lot of jobs to the market, and obviously a lot of infrastructure because the Queensland government's intention is to create a really well-connected southeast Queensland leading up to that. And if anybody that's lived in southeast Queensland for the last 100 years, they know that it isn't well-connected at the moment. So it'd be nice to have some good trains and highways and stuff.
One of the negative things that I've noticed in the last couple of years with COVID globally is international tourism, domestic tourism, international students and migration. Like, what are we noticing with the ABS at the moment on that stuff?
Finally, we're starting to see this pick back up. We started to see the students come back in last year as the borders slowly but surely started to open, but now we're starting to see that tourism. This is helping a lot of the regional towns around Australia that really rely on that tourism to, make sure that they're moving in a positive direction. But this is also fueling the rental crisis as well that is unfolding at the moment. So the more people that come into Australia, they obviously need a roof over their head whilst they're here. Well, I know camping's popular here in Australia, but not that popular. So we're seeing those vacancy rates really start to turn around and come down to record low levels. This is sort of a positive and a negative. It's like a double-edged sword, that one, in the sense that, renters are going to be negatively affected by this low vacancy rate and they're going to have to pay higher prices for their accommodation. But landlords, property investors are going to reap the benefits of this because they're going to increase their income, which will help with the increased expenses at the moment as well.
I love that. And lucky last, we're reading something interesting this month from the Commonwealth Bank and the Reserve Bank of Australia around their plans for the next couple of years around monetary policy. So this isn't being communicated well in Australia by the mainstream media at the moment, but what can we expect at this stage, loosely, again, knowing that it could change with the blowing of the wind?
Yeah, exactly. Like, no guarantees here, just like anything in life. But something that isn't being communicated, and I really think it should be because it will help people plan for the future, is just interest rates aren't expected to continue going up for a long period of time. What the expectations at the current stage of the economy is, we're going to see that cash rate get to roughly around 2.6%, currently sitting at 1.8% after the most recent lift in August. And then once it hits 2.6, they see it stabilizing at that level for a short period of time. And come July, August, half two of 2023, they actually believe that interest rates are going to start coming backwards again. How far backwards, it's really hard to say at this point in time. But I think it's important to note that interest rates are going to fluctuate depending on where that level of inflation is at. Obviously, they want to get that back to sort of your standard 3% level, and that's what they're working towards. Like always, plenty of negatives, plenty of positives. It's good to have a different idea and a different perspective to what's getting seen out there. But will the Australian property market bubble burst? We have no idea what's to come next. I think over the long-term future, over the next 10, 15, 20 years, there is some amazing gains to be had in most markets around Australia. So I'm going to be focusing my attention on the longer-term picture, not really the short-term picture, because it's very, like history will tell you, it's very difficult to predict short-term movements.
Whew, that's a wrap.
That's a wrap.
Have a spin.
Bro. Yeah.
Oh, sweaty. So sweaty. Oh, that's good. That's so nice. Oh.